The following is a presentation of TFNN.
Welcome to the Money Masters Show, folks. I am Steve Rhodes, and Tom, speaking of money, Tom today is up in New York City. He is up at the Hard Asset Show, and folks, if you are anywhere near that area, please go up and see Tom, say hello. You can shake his hand, but I think he would prefer a bear hug, a big bear hug. And I know he is kicking things off for the Hard Asset Show. Should be an absolutely great, fantastic show. If you're up in that area, please stop by and see him. Right now in the markets, you got the Dow trading off 137 points. S&P's off 14. Composite off 28. Small caps down 9. So leading the charge on the way down. Now the small caps down 1 2/10%. Apple trading off $2.60. We're certainly going to take a look at that. But first, we're going to our man Marvin in Orlando, Florida. Marvin, thanks for calling. Thanks for holding.
Hi, how are you doing?
I'm doing great. Yourself?
Oh, doing fine, thank you.
Oh, that's great. You wanted to look at the SPYs?
Yeah, I wanted to see if there's a bounce that we get from this level. What's a good point to maybe short the market, SPYs?
Well, I think you got to wait to see how today plays out. Right now, if you take a look at the SPYs, do you take a look at any charts, or kind of help me understand where you're at on the charting or the technical side of trading? Any tools that you use?
No, actually, I'm a kind of an Astro guy myself, so I kind of look at stuff. So.
And I'm assuming you're not talking Houston Astros, so.
No, I see a big. I look kind of long term. So there's that Uranus, Pluto.
Oh, you do. Okay.
June. So that's a big one. So I know the market is going to trend down into probably July 4th, I'm guessing.
Yeah, okay. So you got another big astro date. You got a 2 planetary index date. That may not be something that you do take a look at, but you've got one of those coming into this weekend, into Friday, along with a whole set of lunar aspects as well. So right now, from a technical standpoint, Marvin, to answer your question, the SPYs are taking on the swing point from March the 6th. The low on that March 6th swing point is 134.36. You're trading out right now 134.13. You had 201 million shares on March 6th. You came down into that area. First, you came down into it on April the 10th with 235 million. So that was telling you were going to eventually be back down there. We came back down there last week on the 8th, but you came down with 213 million shares. So it's got volume as it comes down there. If we take a look at just simply the first 40 minutes of trading, these SPYs have done almost 30 million shares, so 28 million shares. So what we're talking about is, 60. So you're talking about quite good volume this morning, at least during the first half hour of trading. So from a bounce standpoint, what you would have to be looking for is you'd have to be looking for the SPYs to reject the lows from March the 6th. So you'd want to see a close today above 134.36, and you'd prefer to see it on less than 201 million shares. So you would hope that if you're looking for a bounce, you would hope that all the volume came out in the morning, and during the afternoon, all the bears and all the bulls are scared. There won't be much in the way of volume, but then you would see it close back above the 134.36 area. If you get a close below this area, what it really sets up a couple of your next intermediate stop is January 30th area, which would be 130.06 into the 131.44, but it really sets up a move down into December 20th, which is in the 122 point range. So I really think that if you're not in the market today, you're so close to different support areas that you really want to let the market reveal itself to you. At least that's how I would be playing it.
So if it does go above 134.36, at what point would you look for failure or something along those lines?
What I would do is last time. So on Friday, although the bounce was not significant, where it bounced up to was the 9-period exponential moving average. Right now, that 9-period moving exponential average is around $136. And so what I'd really have to see, so that would be the first piece of information I could give you right now as we speak. What I'd really have to do is understand what kind of candle was formed today, what type of, what the volume pattern looked like today, because ideally, what you would do is you would see a bounce. You'd like to actually try to get a bounce price in at about the $138 area, which would really be probably the highs of the May 4th downdraft. That high out there was 138.66. But I don't think that the market, is necessary. If we do see a bounce, unless we see some significant, not just a significant close up above the March 6th area, but maybe some type of hammer candle where you can really see the bulls step in and try to take charge going into the close. I don't think it's going to bounce all the way up to that 138 area. So,
great. I've never heard of a planetary index. Can you explain that a little bit?
Yeah. If you do you use an ephemeris by any chance?
Yeah.
You do. Okay. So the ephemeris that I use is has got a daily aspectarian at the bottom. Does yours have a, it's called the 2007-2020 ephemeris. Does yours, if you were to open up your ephemeris, does it have the daily aspectarian, which each day it tells you what the planetary alignments are and how many occur on that day?
Yeah, just like your regular aspects for the day.
Your aspects for the day.
Yeah.
Okay, so if you were to count those each day, and I did a study. Actually, the original work came from Larry Pesavento and Dr. Ruth Miller, and there may have been a couple other folks. And what they did, the first study that they did, was they took a look at each day how many aspects occurred and figured out a standard deviation, used a bell-shaped curve. And what they looked at were the days on the outside where you had anomalies, meaning you had maybe 0 to 3 days where there was only an alignment. If you go take a look at your daily aspectarian and you go to this Friday, the 18th, what you'll see there are only 2 aspects. And that is a real anomaly. I took their work because I used to plot their work on my charts, and then I went ahead and went one step further, paid a good sum of money to have the entire thing digitized so that I could, with some software that I also had built, could lay over planetary index dates on my chart. When you have a 2 planetary, and I took a look at the data that I have is 300 years. I could have thousands of years if I wanted, but I figured 300 years was planets 110,000 points. And a 2 planetary index day over a 300-year period happens like 67 times. So, it doesn't necessarily have to be market-driven. It could be something else that goes on in the world. But oftentimes it is market-driven, and a 2 planetary index date is very powerful. So
are you saying the anomaly is that there's so many, it's so low aspect?
So few. And you also have it where you've got if you've got it depends on which aspectarian you have, because the new one has got the Ceres and Vesta and, 2 others, that are out there. And so just, it depends which aspectarian you've got, which ephemeris you have. Right. But if you've got 14 or more, you typically also have a planetary index. So 3 or less, 14 or more is a pretty good guide, but it also really depends which aspectarian that you're looking at. So yeah, so that's so so I would add that to your arsenal as well as some of the other astro impacts. Oh, great! Thank you for your help. You live in Orlando for a long time? Yeah, last 7 years. Oh, okay, all right. So this weekend we had an ex-Orlando resident, Matt Cucci. Do you golf? Huh? Do you golf at all? No, not at all. No golfing. That's too. Well, you should give it a shot. This weekend up at the TPC in Jacksonville, we had an ex-Orlando resident, Matt Kuchar. He won the TPC golf tournament. Even if you're not a golfer, it's a great tournament to watch because they got that island hole. And, yeah, and so look, I do appreciate you calling in. Marvin, I hope that the information I gave you helped. Thank you very much, sir. You bet. You have a great day. Bye-bye. Yep. So, folks, what's interesting is, Matt grew up playing golf at the same golf course that I'm a member at, and used to play with his dad. Would see him up at the club all the time. Would play with his dad on occasion, and it was great. 1997, Matt won the U.S. Amateur, and when he won that U.S. Amateur, he just had this smile, that glowed from planet to planet. And so he had that great smile, and you had Titleist and Nike and everybody after him to go pro. and he had some pretty large endorsements. We're talking $4 or $5 million type deals, and he turned it down. He wanted to continue playing at Georgia Tech. He wanted to actually kind of be the next Bobby Jones and really just simply, play as a amateur. That didn't work out so well. And, had, just like everybody in life, you have rough patches. He had his A to B, and his B, folks, ended up really being winning the U.S. Amateur. He never won the club championship at our club. And not that that's a real big thing, but, I'm just simply trying to show you A to B equals C to D, folks, happens in everything that you do in life, whether it's these markets or it's just simply in life. In the case of Matt, his B point, his A point was where he started, in essence, playing golf, and his B point was when he won the U.S. Amateur. Had a plan, had to shift his plans. He went from a B to a C, pulled back even, after he got on the Pro Tour, lost his Pro Tour card, and had to go play in the Nationwide Tour. Got his swing back, and obviously came through that C point, folks, with wide price spread and accelerated volume. And so much so, that took him to winning the TPC golf tournament, one of my favorite courses to play. Just simply because the very first time I played that course, I birdied 17 and 18. On Saturday, when Matt hit it into the water, I was like, oh, no. You don't realize how much practice he had hitting the island greens. At our course, we happen to have one of those island greens. So he got to hit the island greens all the time. Plus, when his dad moved up to Jacksonville, he got to play over at the TPC all the time as well. Anyways, congratulations to Matt. Absolutely great winning the golf tournament. And really the correlation there, folks, is there are so many life stories. On Friday during the Trader's Edge show, I talked about how I can assimilate life to sailing, folks. And the wind blows the same for each of us. It absolutely blows the same for each of us. It's how we plant our sail when that wind changes, or as we get ready for that wind to change, that makes all the difference in the world, that gets you to the destination that you're headed for. 877-927-6648. Dow's off 146. S&P's off 15. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow. Let's see here. I just messed up. Where did that go? I can't. Let me switch over to this page here. So we have the Dow right now trading off. Where did that go, Lord? There we go. Got the Dow trading down 140, S&P off 15. You've got the composite down 30. New York Stock Exchange down 105 points, folks. Down 1 point. The New York Stock Exchange is what's leading the market down. The breadth of the market is leading the market down. They are the leader in the clubhouse, down 1 3/10%. Neck and neck, right behind it, the small caps. Russell 2000 down 1 3/10% as well, down 11 points right now. The NDX only off 0.9%. We're absolutely going to go ahead, and take a look at the NDX. In fact, what I've got up on my screen here is Apple. Now, just before we go take a look at Apple, we had Marvin calling, and folks, this is the New American Ephemeris. Hopefully you can see this here on Tiger TV. In fact, you can always catch the archive of this show, folks, on Channel 10. You can catch the archive of the opening hour that I do on Channel 9. This is the New American Ephemeris that I'm talking about here. And at the bottom of the New American Ephemeris, that's where we was talking about with Marvin, where you just simply have all of the daily aspects that are there. And what we have, if you were to open this up to May 18th, what you will see is you've got a 2 planetary index day. Pretty powerful day, folks. Don't know if it's going to be an impact on the markets or something else in life, but it is due to be an important day to be watched. It doesn't actually have to be on that day. It could be Thursday, it could be Friday, it could be Monday. But do expect, and at this stage, the way the market's trading, looks like it's going to trade down at least into Friday. And we'll just have to see what kind of a rejection or confirmation, what type of follow-through that we have. And the market's going to give us the information. And so what we're taking a look at here is the Apple chart. We're taking a look at the Apple daily chart here, folks. And now what Apple is doing, it's moving down into its April 24th area. It's actually kind of been in there. That's the most recent swing point that is out there. 38 million shares as Apple traded down into it. So we've been trading for nearly an hour so far. Nearly an hour and only 3.5 million shares out of Apple. So if you just simply multiply that times 6, you'd have a pretty decent idea of the volume inside Apple. Even if you multiply times 6.5, you'd have an even better, and the way that the markets move is you've got much more volume during that first hour typically, and then we know that we have a lot of volume coming in the last 10 minutes, but certainly maybe during the last half hour of trading. right now, Apple is not wanting to go down. But here's the problem. You know, when you take a look at it, the market, whoever's in the market, the traders in the market, the bulls, the bears, the bulls, you know, there's not enough bears selling Apple at this stage, and there's not enough bulls buying Apple. So it's just kind of lingering here. And quite frankly, until you really test the low of that swing point, the low on Apple being 555 even Steven, folks, what you are taking a look at is with it just simply trading down there, it's not giving us enough information. It is giving us the information, not enough to push us down, and the stock market is much, much more than one stock. And that's why I was having you focus on the New York Stock Exchange. It's why, you know, the New York Stock Exchange being down 1 4/10%, being down 112 points right now, is really what is giving you the information about where the markets are headed. And they're headed south, and they're headed south because King Dollar is headed north. Well, let's take a look at gold. Let's switch over to gold here real quickly. Take a look at gold. And folks, Tom is up at the Hard Asset Show in New York City. So if you get a chance, go up there. Please give him a big bear hug. Tell him I said so. He would love it. And we're taking a look at gold. We're taking a look at the weekly chart right now. And on the weekly chart, and I've been pointing this out if you've been watching and following along with our show here, what you are seeing is the long-term trend line. And long-term trend line, folks, I'm just really starting with the low of the candle going back. This is a weekly candle going all the way back to October 24th, 2008, when gold traded out that week. The low was $681 even, $681 even. And you take a look at that trend line. That trend line was tested. It was absolutely tested in December when it got down to a low of 1523. Well, that 1523 area, 1523.90 to be exact, that 1523 area is what is under attack right now. That is a swing point that is out there. You can see we're trading at 1559. The high of that weekly candle going back to December 30th, 2011 is 1609. You are trading inside that. You can see you also, I'll just go ahead and blow this up. It'll be easier for you to see on Tiger TV. You can see you broke that trend line. Now, last time down, going back to December 30th, and granted, it was certainly a New Year's celebration. It was a lighter volume week. You did 334,000 contracts on the way down. Last week, you did 803,000 contracts. Folks, I don't care if it really was a light session, a holiday session. 803, you know, you can go ahead and add something in for the week of December 30th. You're not going to get close to 803,000 contracts on the way down. You know where gold is headed, folks? $1,150. That's nothing more than a 0.618 retracement. It's not going to get there overnight, but that's where it's headed, folks. We'll be right back.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow trading off 137, S&P's off 15, New York Stock Exchange down 102 points. Over in Germany, you got the DAX trading off 154, FTSE off 125. And King Dollar up 37 ticks. Gold trading out at 15.61 right now, on its way down to 15.23. Silver at $28.34. That also is on its way down to the swing point, low swing point. We'll take a look at that in a minute. One of the things, folks, that as a contributor doing shows like this, each of us love. In my case here, at the opening of my Trader's Edge show, I like to be able to spend maybe a little bit of time taking a look at metaphors and the reason why I like to be able to assimilate experiences that I've had and how they apply. Even just before, when the last break was talking about Matt Kuchar and his A to B equals C to D point. Because the more that, and I talk about swing points, being major intersections and how you can take a look at the markets, because the fastest way to rapidly learn is to always link the known to the unknown. So if you're trying to teach somebody something, if I start talking to you about swing points and retracements and, foreign things that are foreign to you, it's going to be very difficult for you to be able to learn or pick up on things. So I'm always working on trying to come up with ways to be able to better describe what's going on. And on Friday, and what we always love is certainly getting interaction from listeners, clients. In my case, you can always send me an email, steve@tfnn.com. And it's always great when we can touch somebody. And I know that each of you are very busy, so anybody that does spend time to write, I always get back to them, because I realize just how busy everybody's schedules are. And on Friday, I was thinking about it like this. We all, when we start off in life, we all start off at the same point. And yet each of us, and sometimes people say it's your circumstances that is the difference between point A and where it is you end up, your destination, whatever your destination is. To me, circumstances, when it comes to sailing, is nothing more than the wind. And the wind is always going to change directions. And in these markets, the wind is always going to change directions. And the whole purpose here, folks, that I'm trying to get to is what it's really all about is figuring where to be able to plant your mast, where to be able to plant your sail, so to speak. And that's the way that it is in life. When you are taking a look at charts, no matter what your belief is, because you only trade your beliefs. No matter what your belief is, you have to open yourself up to looking for a change in wind. And when you see that change in wind, you need to set your sail in perhaps a different direction. Well, we've got a caller on the line who sent me an email. His name is Glenn from Massachusetts. And what's so cool is he had some other real-life experiences just about that. So, Glenn, thanks for calling. Thanks for holding.
Well, thanks, Steve. Yeah, when you had mentioned sailing as a metaphor for trading,
yes,
it really I said that's exactly it. You're racing out there, or you're sailing out there in an atmosphere that is somewhat unknown, and you just have to take the odds and prepare the best you can.
Yeah, so tell me, because what's always great is when like someone like yourself or others can actually assimilate that to a real life experience.
Yeah,
and you've got that. You've got several apparently, so which is great.
Yeah, I sailed for a long time. I raced a Rhodes 19 out of Marblehead for 10+ years.
How's that for a coincidence? He raced a boat that was named after. Well, it wasn't named after me. It just happened to be fortunate enough. How'd that happen, folks?
Well, I don't know. That was I didn't even realize it until you just said it.
I was
incredible.
That's what I said when I got the email. I said, "Wait a minute here. How does that happen?"
A little 2-3-man crew.
Yes.
And 20 or 30 boats in a fleet, and we raced every weekend.
Yes.
And your analogy reminded me of one day when I was out racing, and it was a very light air day.
Yes.
But like every race, we prepared as best we could before we went out. And one of the things that always check, of course, is the weather report.
Yes.
Now, back when I was racing, we didn't have interactive radar, but
sure.
At least you could look in the paper and see what was going to happen. And on this particular day, we were sailing on the final leg of the race.
Okay.
When the wind just died.
Oh,
dead.
man.
the ocean turned into like a sheet of glass.
But now, what place were you in at that stage when the wind died? Because there were quite a few people in the race, right?
Well, like many of the races, we were pretty close to dead last.
Okay, all right, that's good. Okay.
And all the boats are sitting there dead in the water.
Yes.
But we knew from the weather report that there was a front coming through.
Yes.
That would shift the wind into the northwest.
Yes.
Which would change that final leg, which is normally an upwind leg,
okay,
into a port reach.
Okay.
So what we did is we had positioned ourselves upwind of the coming change.
Yes.
We set the spinnaker. I moved everybody to the leeward side of the boat so that the boom would rock over onto the right side.
Yes.
And the sail would kind of take a little bit of shape.
Yes.
And then we sat there and waited. And sure enough, a little breath of a wind came up, and a boat started to move forward. And as we did, we were moving extremely slowly, but forward and constantly forward. And as we did that, we went that way past half the fleet, who were still sitting there dead in the water.
That is such an incredible story. I mean, it's such an incredible story.
Well, the funny part was they were in exactly the same wind.
Yes, exactly.
But they weren't prepared for it, and they didn't take advantage of it. And as I remember it, we finished that race third.
Which is really great, because that was really the whole point of the story was the wind is going to come along. And it's just really how you're going to prepare. There's going to be changes in these markets. It just depends which chart you're trading, what your investment strategy is. Whether you're a day trader, intraday trader, longer term trader. The winds are going to change. And it's all about simply how you set your sail. And, it's nice to be able to have a story like that I'm sharing with the audience, but then more importantly, to have somebody, like yourself or others that'll write me a story and say, you know what, this exact same thing happened to me. And I think, now if you can use that and you use that as your image while you're trading or investing, to me, that's really what it's all about.
Well, I'm going to be on your program here on Friday and see if I can learn a little bit more and
oh, that's great.
Increase the odds of.
Or we'll teach you how to set your sail. We'll teach you how to set your sail by buying and selling that D point because it goes on in the marketplace all the time.
Well, I appreciate it.
Hey, Glenn, thanks so much for calling. I really do appreciate that. Thank you for calling in. It was so much better that you could tell that story versus me telling the story on your behalf. So I really do appreciate you doing that.
Great. Have a great day.
Okay, you too, folks. And folks, if something that one of us contributors maybe shares with you, or if you're listening, I just simply give you maybe a metaphor for life or something, absolutely. You send me an email or give me a call. Just like Glenn, I would love for you to be able to call in and share that with others because, in case of Glenn, he's got an anchor. There was, he now has an anchor because it was something that he actually did. He prepared for it. Again, he knew that the wind was going to change, and it was just simply a matter of being patient. It was about being patient. And that's really when Marvin called, and he was looking for a place to short the market. We're taking a look at A, B, C, D patterns, take a look at 3 drive patterns, take a look at hammer candles or bullish engulfings coming into, areas where it should be some support. And it's really all about being patient. You don't have to get anxious and believe that you've missed out on a move. In fact, if you've missed out on a move, it's okay. Better that you should be wishing you were in a market that you want to be in than wishing you were out of a market that you can't get out of. You don't want to do that. So let's go up to Massachusetts again, and let's check in with Mark. Mark, thanks for calling. Thanks for holding.
Happy Monday, Steve. How are you?
Good. Now, Mark, did you last Monday, for you specifically?
I saw that.
You did.
You did it both on your show and Tom's show.
Okay.
And I saw that. You were Go Long America. I like that T-shirt.
Okay, good. Okay.
I like that, Steve. You must have a local place down there that you buy your polo shirts.
No, I hit every Ralph Lauren store all weekend that I could and found that shirt. It was and there was only one.
I think Tom and me should both give you a round of applause for Go Long America.
You asked about it, and I thought about it, and I had been looking for one. I had seen, a number of different countries. I had seen a USA one, but I didn't see it in my size. And I went to a Ralph Lauren store, and when you know it, it was the only white USA shirt that they had, and it happened to be in my size. It was kind of amazing.
Well, I saw it. I didn't call in because you had called the preceding Friday, but and I know you don't like to take too many calls.
No, we love to take calls.
But I saw that as soon as you came out of the air, I said to myself, "Oh my God, look at the shirt he has on!" And then you mentioned my name, and then you mentioned it on Tommy's show, or you mentioned it on the show also. And I said to myself, "Well, he's going Long America for sure."
Well, we love to listen to our listeners. We absolutely do. So and we do appreciate you listening out there. If not for you guys, we don't want to talk to the walls.
Well, I do know. I've been listening to Tommy for quite a while.
Yes, absolutely. Now, you wanted to take a look at the XLF today. Tell me what you're doing.
I wanted to look at the financials in general.
Yeah.
They obviously took a big dive in the Greek news today, and I'm thinking, would they have a bounce tomorrow? And would you play that? Maybe buying it, maybe right now, and then maybe selling it in the morning and holding it overnight, or what do you think on that?
Well, what the financials are doing right now is they're complete. Now I'm looking at the XLF, so we're taking a look at the financials in general. First thing that we got to get right is going to be the market direction, because let's just say that even if you were to take a look at playing the financials, but the general market is still in a downtrend, isn't bouncing, isn't rejecting some swing points, and I just simply wouldn't go into any sector. In this case here, I've got the XLF on my screen, and you can see that today, completed a 1-to-1 A to B equals CD down. That price projection was 1462. Your trade out at 1458. It got down to a low of 1457. Now, what it has done, though, as it has come off of the C to D leg here, this has some real conviction to make more than the 1-to-1 A to B equals CD. You see, the market 60% of the time is going to do a 1-to-1 A to B equals CD. The other 40%, and that's really when I'm going to be teaching people on Friday how to master that C to D leg, is just simply the other 40%. how do you know when it is headed to those other areas? Those other areas could be 1.272, could be 1.618, could be 2.618. In fact, if we take a look at, I'll just switch over to the bonds right now, and you correlate what's going on in the market to the bonds, the 30-year bond right now trading it's having a big day, wide price spread, and it's moving into the 1 to 2.618 A to B equals CD, which would be right at 147. You're trading at 146.13. So the bonds are telling us that the move to the downside in the market is not over. King dollar, which Tom decided to take north, is telling us that the move is not over as it gapped up in the when it came online last night, and this is headed up to 81.70. So I think when you take a look at would you be trading it intraday as opposed to holding it overnight? Because I think
one of the things that I have learned from the three of you, you, Tommy, and Larry, and to a lesser extent Basil, is you. And I'll quote Larry. Sometimes you can't get out of a position, or because the market has moved. But take the reverse of that. You sometimes can't get into the position neither. If you try to play the financials, over the weekend, unless if you bought it into on Friday's close or Friday post market, you couldn't get in this morning. So, what you and Larry, really Larry and Tom, I don't hear you say it too often, but you really sometimes can't get out of it, and that's true, but the reverse is also true, or the inverse. You really cannot get into it because it's moved in that pre-market when Europe starts trading at 3 o'clock, and by the time we can get trading, even in the pre-market at 8 o'clock for most of us,
yes,
it's too late for us to get in, and that's my thinking.
Yeah, so see, my theory is that yes, you might missed out on a move, but the market is continuously giving us patterns, and I call that the buying and selling of the D point. It doesn't matter that I'm doing a workshop on it on Friday or not. But if you take a look at just simply the normal breathing patterns that are out there, it will give you the signal, and it will give you and so what you need to do is during the markets where you take a look at playing the XLF and the market is closed, your real focus should be on what's going on the patterns inside the ES Mini, what's going on inside the futures contract, because that will help you to understand whether, in my opinion, that will help you to understand the A to B equals CD pattern that's happening overnight,
right?
And whether and whether or not that's complete. And what I also mean by complete is the market will tell you. The market will give you a signal by giving you a reversal candle as you're coming into those patterns. It'll give you a second opinion. It will give you a confirmation that it's going to move in that direction. And then when you have that, you can go ahead and, even though you think, the market is gapped down, you can, not necessarily to play it on the short side, but it'll give you the signal where you can maybe play that counter trend bounce.
Okay.
Also, intraday, you can take a look at the patterns that are out there. But if you stay in there, we'll go take a look at the XLF. We'll go ahead.
Steve, can I hold because I have a follow-up question?
Yeah, absolutely. I would like you to hold.
Great,
okay, so hold on. We'll come back to Mark. Right now, you got the Dow off 120, S&P's off 13, King dollar up 32 ticks, gold down $22 right now. Stay tuned, folks. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. Let you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. So you got the Dow off 102 points, S&P's off 11. We're on the line with Mark in Massachusetts, and we're taking a look at the XLF. And please stay tuned, because following this show, we do have Basil Chapman. We're going up north, and we're going to ride the Chapman Wave. Then we go out to Tucson, Arizona. We go out to Larry Pesavento's ranch. He'll be with us from 12 to 1. Back here from 3 to 4. David White will be the warm-up band for the Tom O'Brien Show. And Tom is up at the Hard Asset Show in New York, folks. If you're up there, please go give him a bear hug. So, Mark, as we come back to the XLF, here's the first thing that I would do. So I'll tell you how I would, as I'm taking a look at trading one of the sectors, exactly what I would do. And the very first thing would be I would go over to the Spider Sector's website. And SPD, if you just type in SPD or XLF as an example, it'll take you right to that area. And there, you've got the components or the weighting inside there. And, it's a weighted index, and so you can see I've got it up here on Tiger TV, and it updates every day. So at the close of every day, you know what the exact weighting structure is inside the XLF. And because you want to really understand what's going on with the underlying instrument. And typically what you can look at is really the top 10 holdings inside there, and to just simply understand exactly whether you should be taking a look at possibly playing a bounce or how you would play it. You got Wells Fargo happens to be 9.8% of the XLF. Berkshire Hathaway B shares is 8%. JP Morgan Chase 8%. Citigroup almost 5%. Bank of America 4.5%. U.S. Bank Corp, 3%. So if you see that on the screen, American Express, 3%. Just the first four alone represent about 31% of the market. So I'm going to take this off the screen here, and let's just first start off with Wells Fargo and see how the number one weighting inside there is holding up. And the ticker symbol is WFC. So WFC, even with the J.P. Morgan news, Wells Fargo was not at all really hampered on Friday. It closed up a bit. It closed out at 33.31, whereas the day before it closed out at 33.50. So so Wells Fargo, the number one weighting in there from a financial standpoint, has not been harmed. If that had been harmed, trying to play some kind of a bounce would be like, it doesn't make any sense. And it also is going into the swing point from March 13th. If we go here real quick then to, let's skip Berkshire Hathaway, let's go take a look at J.P. Morgan, because J.P. Morgan is the third weighted stock inside there. JPM is a ticker symbol. We know they absolutely got crushed. Damaged on Friday because the volume you had. There was 217 million shares on the day.
Let me ask you a quick question, because you're almost out of time.
Yeah.
I look at these things all the time. That's one of the things that Tommy has taught me anyway very well to do.
Yes.
Look at that inside the ETFs.
Yes.
But one of the things that Tommy has also talked about is energy. And when the market comes down, the market has to breathe. And both of you guys use the term breathing.
Yep.
And when you inhale, you have to exhale. And my question is, if we come down hard, will we have a bounce? Although maybe it may only be for a couple moments at the open tomorrow. If we come down hard, will we have a bounce? Will that market breathe in the other way tomorrow?
I don't know if it'll be tomorrow. Absolutely, though, the market will breathe. And, the way that I am able to measure it and take a look at it is by taking a look at buying and selling the D point of the stock market. I like to be able to take a look at the futures as giving us the best signals here, but then I also like to take a look at swing points. And J.P. Morgan, the one plus going into J.P. Morgan and that possibility to play that bounce is go take a look at J.P. Morgan on October 27th. Key swing point, it's got 76 million shares. It's trading down towards the low of that today, but it's got 40 million shares. Mark, this is saying J.P. Morgan, it's not over. The selling pressure is not over there, all right?
Okay, Stevie, thanks. You have a great day.
You
Talk
bet.
to you soon. Bye.
You bet. And go long America. Folks, stay tuned for Basil Chapman. Thanks for joining me. I'll look forward to seeing you again tomorrow morning. You catch my show, The Trader's Edge, at 9 o'clock. Have a great day, folks.